The financial world is no stranger to market crashes. This can be triggered by a variety of factors, including geopolitical events, economic downturns, or simply investor sentiment. Whatever the cause, market crashes can be a frightening experience for investors with the potential to wipe out years of hard-earned savings. However, with the right approach, investors can not only survive a market crash, but can even come out ahead. In this video, we're going to look at surviving a market crash and thriving in its aftermath. That's what I wanted to look at, beginning with stay calm and assess your portfolio. Market crashes can be an emotionally charged event, and it's easy to make impulsive decisions in the heat of the moment. However, it is crucial to remain calm and focused during these times. Panic selling or making sudden changes to your investment strategy can do more harm than good. Instead, take a step back. You want to zoom out and assess your portfolio with a clear head. Look for opportunities to diversify your holdings and limit your exposure to the markets that are crashing. Now, of course, easier said than done. How do we do that? Well, we need a money GPS so that we can navigate this. We have to look at where we are at and what our goals are. We don't want to remain stagnant during these periods. In this example, we look at, let's say, 2020. We knew that there was going to be turmoil. 2022, we knew there was going to be turmoil. And so you could have held on to your assets that you had. But as you had new money to put in, why wouldn't that be put into something you knew would actually increase value as the markets declined, like an inverse ETF, for instance? Because as the markets are declining and your portfolio is actually going down, instead of dollar cost averaging into that, most people knew that was not going to be a very good time. So if you bought into an inverse ETF, that would have been rising at the same time and they would have balanced each other out. But see, that requires some level of sophistication, and most, they just say, I'm not going to do it, dollar cost average instead. Stick with me here. Focus on long-term investing and avoid timing the market. Once you have reviewed your portfolio, it's important to resist the urge to time the market. Trying to predict market movements is a risky strategy that rarely pays off. That's why you don't have to sell your entire portfolio. You don't have to say, okay, I'm hitting the sell button, everything's going away, I'm going to move my money into this. No, we can make small adjustments along the way that basically give us a little bit of risk parity. That's the point. Instead, focus on long-term and avoid making impulsive decisions based on short-term market fluctuations. Stay disciplined and stick to your investment plan even when it feels like the world is falling apart. So we have to have that long-term plan and what we believe is going to take place. And then along the way, we make these adjustments. We don't want to be too rash. We don't want to be too concerned about all these things, because a lot of times, this volatility doesn't play out in the way that we think it will. Okay, a lot happens along the way. Maintain a cash reserve. Another key strategy for surviving a market crash is to maintain a cash reserve. Having cash on hand will provide you with flexibility and liquidity you need to take advantage of the buying opportunities to cover unexpected expenses as well. Consider setting aside a portion of your portfolio in low risk, liquid investments that you can access quickly if needed. And this could be literally cash just sitting there in the bank, could be a money market fund. You want to have that available to you. There's no doubt about that. You want to keep too much because of the inflationary factors, but you always need to have some. Build a community of support. In addition to these strategies, building a community of support can be a critical thing during a market crash. Surround yourself with like-minded individuals and investors who share your long-term perspective and can provide you with emotional support during turbulent times. If we're all together in this, like we are in the comment section, well then we're going to be better off because we know, hey, we're not the only ones that know about this stuff, right? Consider joining an investment club or forming a group of friends and family members with shared interest in investing. So for instance, I've got the comment section down below, I've got the Discord, and of course I've got the insiders email list. So these are the different places where Money GPS like-minded individuals can come together, but of course there are many others out there. This community can help each other by sharing knowledge and resources, such as growing food, managing repairs, protecting each other in the event of a crisis. By pooling our resources and skills, investors can better weather market crashes and emerge stronger on the other side. Look for buying opportunities as well. Finally, look for buying opportunities during a market crash. While it can be tempting to sell everything and wait on the sidelines, market crashes can present opportunities for savvy investors. Look for high-quality companies that have been unfairly punished by the market and consider adding them to your portfolio at a discount. By adding or taking long-term perspectives and staying disciplined, you can not only survive a market crash, but come out ahead. And that's something that a lot of people, they really don't know. They stay on the sidelines too long, they sell everything, and this is an issue. Just like with real estate, we have these assets that can provide cash flow so that we weather the storm. And that's why cash flow is so important and yet ignored. Very big issue. We need cash flow. So I want to finish this up. Surviving a market crash requires a combination of preparation, knowledge, discipline, as well as community. By staying calm, diversifying your portfolio, maintaining a cash reserve, building a community of support, and looking for buyer opportunities, investors can weather even the most volatile markets. Don't let this be scaring you away from investing. There is a right strategy and a mindset, and they can present opportunities for growth and success. So this is the way I say it. Now, I look at investments totally different than most people. I think having a business is an investment. When you invest in a type of business that brings you in cash flow every month, that's something you can't get with all these other assets. And that's why this part of the 4 asset classes. Paper assets are only one of them. And generally, for some reason, we always have business neglected as part of that. And so that's something important that I wanted to share with you today. I hope you found this interesting. If you want to know more, please let me know. Whatever your thoughts are, put them in the comments below. Let's have that community action, and I'll see you next time. Take care.